you can search how you should be investing. You know, if you're afraid you're going to lose your money, you're worried about how your investment strategy should look in retirement, and you go to Mr. Google, you might find something like this. At age 60 to 69, consider a moderate portfolio, 60% stock, 35% bonds, 5% cash/cash instruments. When you're 70 to 79, moderately conservative should be the way to go, right? 40% stock, 50% bonds, 10% cash or cash instruments. And then 80 and above, 20% stock, 50% bonds, 30% cash and cash investments. Okay, so that's your answer from Mr. Google. Let's pick that apart just a little bit, okay? Mm-hmm. First of all, that's a one-size-fits-all approach, right? Okay, yeah. You get that. Everybody got that. The next guy that Googles that's going to get the same. And your income needs are going to be different than the guy who Googles it next.
Not to mention the market is ever changing. Yeah. So those investments, think about last year in the bond market. Yeah. If you had so much, I've got bond portfolios that did worse than my growth portfolios last year because of all the interest rate hikes. So if you aren't paying attention to where the market is and individualizing that for your circumstances, there's a lot of risk that you're taking on, in my opinion.
Yeah, you think about that, Troy. Last year, if you followed this, age 60 to 69, a moderate portfolio, 60% stock, 35% bonds, 5% cash. The cash would have held up, but
everything else was down.
Everything else was down. It was one of the worst years on record for 60-40.
Right. Yeah. So that just goes back to having a plan that takes into consideration those years where the market just doesn't look good, whether it's your bonds, your stocks, whatever investments you have, and a plan that makes sure that in those times it doesn't impact your income.
Again, we understand fear, a perfectly reasonable reaction to the concept of life without a paycheck, but it really requires a mindset shift. If you are afraid you're going to lose your money and are worried about your investment strategy, the plan can help answer that. Thinking of retirement as not a stop sign when it comes to your investments, but a yield sign. And the game does need to change, but it is not a full stop.